Hello, and welcome everyone to Disruption Demystified, a podcast dedicated to bringing you all things fintech, digital, and disruption, proudly brought to you by Codebase Technologies, a global fintech services provider. My name is KP, and I will be your host for today's session, which is also our first ever episode. Joining us today, we have Samir Khan, APAC Managing Director and FinTech professional with over 40 years of experience in the business. Thank you for joining us today, Samir.
Thank you, KP. It's a pleasure to be here.
You are very welcome. And for today, we're going to be talking about one of the most discussed topics of late, open banking. And in particular, we're going to be speaking about what open banking looks like from an infrastructure perspective and what the ecosystem of APIs look like. So Samir, let's start with open banking. We're hearing a lot about open banking and API infrastructure. And, with Codebase Technologies being an API-based solutions provider, what's the deal with all of that?
Right. A good question, KP, about, from a perspective of choosing to speak about, API infrastructure. I just want to take one step, back, if you will, from understanding, first trying to share our thoughts, as an organization and what my thoughts are around why API or the API framework has now, people have been talking about it for, over 5 years, and there have been a lot of conversation. And of course, which also means that financial institutions as well as technology service providers have done a fair bit of there's a fair bit of growth, I would say, from both consumption as well as creating that infrastructure. And therefore, I guess, the infrastructure piece becomes quite pertinent and rightfully so. We must speak about the infrastructure, right? So I guess, when people start talking about APIs, it's what's never spoken about is how this what it takes, what does it take from having these APIs made available or accessing the ecosystem that banks have or financial institutions have today, right? So. And there's a term that has been coined in the financial services circles called as financial plumbing, which means, we know the taps, we see the water, we know how to, dispense or avail hot water or cold water. But then there is a complete back end or the infrastructure, if you will, which is, the entire plumbing behind, which often gets unnoticed, So it's important, to speak about it, to make that make that aware to organizations and to the audience at large, so they have that as a knowledge base and therefore understand better how we do things at Codebase and why and how this whole API economy thrives. Because and when I said that there's been a fair amount of work which has been put in over the last 5 years, it also means that the kind of work that's been put in is essentially, on an infrastructure level, a lot of it, for that matter. And in order to some of the smarter minds in the industry, and especially when I say that, I mean, people who provide and banking and technology has married itself in such a way that, I think banking without technology is something that one can't really imagine anymore, right? So it's
Yep.
all very tech driven, right? So which
Mhm.
means I think in the 5 years or maybe more for that matter, a lot of tech minds decide. I've seen them in action in putting up and a thought pool of having a certain infrastructure in place that allows for information exchange, data exchange in a more simpler manner
Right.
than the traditional way of accessing systems and accessing data.
Mhm.
So, if I was to, uh, explain or share, in my experience of how things were done earlier, and most of the audience would be aware about this in any case,
Mhm.
but at the risk of revisiting that kind of framework, what was happening earlier still happens today, but what happened earlier was if any business wanted to participate in providing services which could be either purely from a financial services perspective or and a good example of that would be a business which is not a bank but has appetite to lend, so they have a large fund pool or an access to a fund pool, and they want to provide loans to either to an SME market or to a retail market, right? So if they had to go about doing their business, it would warrant for them to, of course, have their own application that would manage the entire life cycle of gaining customers, managing customers, dispensing those loans, and then managing those loans and collections, and and so on and so forth, right?
Yep.
And then, but they wouldn't be able to do this by themselves, so they would have to definitely work with a bank because it's the bank that holds the money, right? So it's your vault. And if they had to work with a bank, then it would mean that they would have to take their application and they would probably have to speak to a bank, and then and that cycle of speaking to the bank and making it selling that value proposition, also from a perspective that they would be competing with a bank, and not that banks look at it as a healthy unhealthy competition, because not all banks can address all markets, right? So
Right.
there would be a market segment that they would feel that the business addresses that market segment in a healthier fashion than the bank would have the appetite for. So, but in coming back to the underlying theme, the for them the integration between these two, their application and the bank's application, and I would say bank's applications, I would put an S after it because
Mhm.
it's a plural thing, because it's not just one application that they would have to integrate with. There would be multiple different applications, and depending
Definitely.
upon what services or what line of business this organization would want to do. In
Mhm.
case of, let's say, a payment business, if they came up, and people have like Revolut and so many other organizations that we can name right now.
Mhm.
If you wanted to make payments available in an easier fashion, you would potentially have to still speak to the bank, and then you would need a vehicle for that payment, right? So that payment could uh, be made only through a instrument, and that instrument could be actually a physical card, and now because of technology and smartphones, it can be virtual cards, right?
Right.
So uh, and then whether virtual or whether physical, your application needs to start working and integrating with the bank's card management system, because cards, whether they are debit cards or credit cards, the banks own the bins, so basically they have all that data,
Mhm.
and special integrate I mean some integration would need to be done there, and then after that, in the whole ecosystem of financial services, you have so many other players. You have Visa, Master, you have, card processors like ACI or ACH payment gateways and so on. So which would warrant for actually for the business to really uh, convince, and to a level where they partner and they have an execution plan for this integration. And then let's not forget that this integration would also mean bringing in a team of people who understand systems on both the sides, the bank's infrastructure, bank side, the applications there, and also from the business side, the problem that the business is trying to solve, and understand that application and figure out a way for these two multiple applications to communicate with each other, right? So traditionally, it's not that business didn't happen. I mean, there were, PayPal started at one point of time, and PayPal started nearly 30 years ago. So it was a fintech in its own way,
Right.
probably one of the earliest fintechs that we never, probably they happened at a time when fintech was not even coined as a word, right? So really it is, so I can imagine what it would have taken for PayPal to actually get into that, get into providing payment solutions. It meant a lot of integration and a lot of things at that point of time, right? But what's really happened from an API perspective, and bringing our conversation and focus to APIs, it's now simpler, very simply put, and to make it easier for our audience to understand. One doesn't need to speak to multiple different entities to actually offer a certain or solve a certain business problem. They would potentially come to one or two single, players. One of them being, like someone like Codebase, for example. We do this, right? We marry fintechs with banks. We help that process, and so they would speak to somebody like Codebase, or there are other players in the market as well that do not do what Codebase does, but they would necessarily, the way to go about this would be to have just a conversation with a few players who would have that channel of integration. And I guess that integration comes in from a more innovative, newer technology platform, which does not involve too much of I mean, what's like, when I guess the theme has been that people position themselves as players in the market, and the way Codebase does that, how we speak or what we say to our customers is, we have a stack today of 477 APIs across different functions of the bank, be it KYC, loans, customer onboarding, and so on. But our target is to have 900 APIs by the end of the year. To make that, and why are we doing this? Is because this will be, this will be like a library. You enter the library, you have all these APIs that help you achieve different things, and we'll talk a little bit about innovation later, but it allows you to execute, simply put, in the fastest way, because it's just a plug and play. So
Right.
you could have a very old 25-year-old legacy system, which probably was built in-house by the bank's IT team.
Yeah.
And probably that's the best system for the bank. Even today, I would say that I've heard you, KP, in conversations with customers, and you say that we never ask you to rip and replace, right? What we
Exactly.
say is, we will come in and we will look at your system, and we'll find a way of how to integrate two systems without really making too much of change within both the systems, right? And so we have connectors, and we can look at the oldest probably legacy platforms, and see, connect them, dated applications, dated platforms to new age, natively digital platforms, right? So,
Right.
through APIs. So, and that in itself has created, a ease of rolling out several innovative ideas. And I just wanted to touch at this stage on why APIs has become such a hot topic, and why many banks talk about it. You hear podcasts around it, and there are various forums in which this
Exactly.
has been. Yeah, people have been talking about it, right? And
Hmm.
you and I have participated in some, and we talk about it with so many people on a day-on-day basis, right? So
Yep.
I guess just for the uh, for our audience today, our thought process is that, I guess, one of the reasons why APIs have become a very a directed approach for financial institutions and tech service providers is to, at large, to generally foster a lot more innovation from a financial services viewpoint. Meaning, there are new business models, new revenue models, new products and services, which otherwise would not be possible, because most of the data, resides in the four walls of a bank. and
Right.
uh,
Right.
and innovation as such means that innovation could be outside the bank, right? Completely outside the bank. It could be a bunch of people who think that, okay, this is a good way of probably making payments at restaurants. A good example is, you could you could start shopping, at Fair Price or a Cold Storage or a Carrefour, and then somebody would say that, let's make it happen in such a way that once they make a payment, I want, probably they'll get their salaries in the next in the next 2 weeks. So while they make that payment today, they may or may not have the entire money in the account, in their savings account, but
Right.
the payment would still be provided. But the bank could, or the idea could be that some financial institution can actually underwrite that payment and
Hmm.
make that payment available to the merchant
Right. Right.
today, and then collect that payment from the account in 20 days, when the salary gets credited into that account, right?
Right.
So
So
this
sort of
that is
like a,
innovation.
yeah, like a buy now pay later sort of system.
Exactly,
Right.
exactly. That's and that's going to become very big, and you and I have had some conversations around that. So that's probably something that we'll visit in our episodes to come.
Hmm.
And that's innovation. And I guess the idea was that innovation requires access to data, and banks hold an enormous amount of data, because from the time you open an account
Hmm.
to the time, and as time passes, the bank knows exactly your patterns. And today, in the field of data science, you must have seen, and we talk about this as well, right? That from a services industry perspective, from IT services, the system integrators that we speak to, they talk about AI, robotic process automation, and a lot of data science projects that are happening in the marketplace, right?
Yep.
What is that exactly? I guess, the idea, I mean, the thing being that uh, there's a lot of data, transactional data, data of how people spend, what they earn, and that and how the money moves, right? So
Right.
that in itself can help, with AI models, can help banks to understand a lot more about customer or a consumer behavior. Uh, but if the bank, if it's a bank's, if it how should I put it? I mean, if a bank has to own the responsibility of taking that data and innovating,
Right.
we're going to see banks becoming very heavy in terms of manpower, and banks will become like large tech organizations. They'll have about, a smaller a mid-sized bank would be as big as 50,000 people. And, that kind of makes the focus go away from banking to something else altogether. And the best way to, overcome this problem, or this is not even a problem, but one of the best ways to allow this innovation would be for anybody outside the ecosystem, inside the ecosystem, to come up with an idea and see how you can move that idea from the drawing board to actually applying it in the ecosystem, which means access to technologies. And if you have if the bank institution has an API first approach, and everything is built around, at the end as your communication channel being APIs,
Yep.
it will allow for people to think out of the box and really create innovation. I guess one of the other key issues or key problems that APIs have been solving has been the cost of, and we just spoke about it, in what I was saying right now, that traditionally you had to speak to so many people. There was so much of integration needed to be done, and therefore, which also meant that the cost of actually getting something up and running was very high and was a deterrent, right?
Mm-hmm, mm-hmm.
And we've seen in the last five or and I keep saying 5 years, but five is since 5 to 7 years we've seen payments being offered in multiple ways. We used specifically in Singapore, we had the option of using the Nets framework and
Mm-hmm.
using Nets payments, and then we learned about Google, Android, and iOS or Apple coming up with their own payment, you know, payment, services, so to speak.
Right.
And then Samsung itself, which is a large player in the Android space, has Samsung Pay. So
Mm-hmm.
different channels of payments started to come about to a level today that I'm sure you must have heard me in conversations that payments are now a commodity. So
Exactly.
you don't really make too much money from payments,
Mm-hmm.
but also that your end customer naturally is expecting you to provide multiple forms of payments, and the easiest form, so multiple easy, quick, fast, and low cost payments, that
Right.
is a given.
Mm-hmm.
You can imagine, right? I mean, if you were to avail a card today, right, and if the and the card or the bank that was offering you a card said that yes, you can buy off Amazon, you can buy off eBay, but per transaction it's going to cost you $10, right? And if uh, we bank with one of the local banks out here, and they said that they come to us and say that use our card, we'll, for every transaction, you don't have to pay us, we'll in fact collect points, and then you can capitalize those points and make some money out of it, in terms of credits or some discounts on some items that you would buy through that card, right? So which is a winning proposition? Somebody who's actually giving you money rather than taking money from you per transaction, right? So obviously, I guess how APIs have helped is that they have actually removed multiple intermediaries, middlemen in the. And I think the easiest way was to first start in country and then look at cross border payments, right? So now, in as we speak today, you there are already frameworks in place where one can transfer money from Singapore into Thailand, and it's just like a fast payment. Meaning, if we do a payment within Singapore,
Mm-hmm.
it you get it immediately, instantly in your account.
Yep.
So that's real time payment, and and there's certain initiatives that are being running where the same happens between Singapore, Thailand, Singapore, and Maybank has done something where between Malaysia and Cambodia, it's real-time payment recognition, right? So which
Right.
means that you see the money instantly, right? And I think the world is moving in bits and pieces. And I'm not, this is a very Asia or APAC specific conversation. I think if we started looking at GDPR, and when in GDPR, if we started looking at Europe, it would be a very, they had a head start. They were ahead of the curve, and real time payments actually is happening between multiple European countries,
Yep.
and that's been mandated, so to speak, and at some because regulation it's a highly regulated, they took a regulated approach,
Right.
and that's made it happen very successful in Europe. I think that I think one of the last drivers has been that if you have multiple ways of connecting different systems to achieve a business outcome,
Hmm.
then how would you put a governance in place? And again, I'm bringing it back
Exactly.
to GDPR, right?
Yep.
So, Open APIs has, if you adopt it as a standard, and you put whether you put a regulation or not in place, but if that's your common language of connecting between systems, then there is some governance that, or some secure, at least if not governance, there is better security, because yeah, there was
Yep.
always screen scraping that was happening. There was
Hmm.
SMS scraping that was happening, and people were not aware about it.
Yep.
Meaning, there was a lot of data being already pulled out or data being shared, and there were no checks and balances. But having a policy or having, taking the route of open banking, which all regulators have and countries have actually, proactively become part of that phenomenon, API phenomenon, has ensured that it warrants for better security. Um,
Definitely.
yeah.
And
So,
just to bring to attention something else. I'm glad you mentioned something along the lines of regulation, because that's the other sort of issue that's often discussed when we talk about open banking and data sharing. So in your perspective, Samir, how do you think security protocols, regulation, how is this going to be shaping up the world of open banking and open API technology, and what do you then foresee the future of this industry to be?
right. Good question again, KP. So I think, from what I've seen and my view on this has been, pretty much, I mean, the choice has been different in different geographies. So of course this is a very geography driven question,
Mhm.
because it warrants that, it basically me also asks, you're also asking in a way that, how, which regulator is going to take what stance, right?
Exactly.
And the stance that, the option of the stances are really just two on a broader level. There are just two stances that regulators are taking,
Mhm.
and the stances, either they take a completely, they do a regulatory driven approach, which means the regulators say that, well, we are embarking on a open banking, open API journey, and we have a defined timeline, and certain services, certain products will have to comply, and they put a framework in place.
Right.
And that framework involves data privacy, being mindful of what and, how data is being shared,
Mhm.
and who owns the data. So from a GDPR perspective, or even if you look at Singapore from a PDPA
Mhm.
perspective, sorry, the consumer, or you and I own our data, right?
Yep.
So my data, I have the right to that, and then, of course, when you're using my data, you will have to seek my consent. So, there are consent management put in place, in that
Right.
framework. So, when a regulatory approach is taken, then, all those checks and balances of how data would flow, who owns it, who has the right to it, how is that consent sought, and how do the users of that data ensure to the regulators that there's no misuse of that data, right? So you're
Yep.
not misusing that data, but you're using that data to provide better services, and and on that basis you seek consent, right? Now, we've seen that. Of course, Europe. I'll speak a little bit about Europe before I move out of there. So Europe, it put in place, a payment services directive before PSD2 came in. There was, PSD1, and I guess what the first directive was to ensure that payments was made simpler, faster, a lesser cost, so to speak, between the European Union, and that also put into place a certain, for want of a better word, certain appetite that got created, or a comfort that got created,
Yep.
which was compliance to a certain framework, right? So they put, so for them, they started out with a regulatory framework. It was successful. It
Yep.
got rolled out. People, all the countries and banks in those countries complied, and
Right.
hence, to embark on an open banking journey, they put in PSD2 and GDPR from both a data governance perspective, and to make payments, cross-border payments, as a real-time phenomenon, using APIs. I think it was easy for them to continue with that, because they already had experienced a regulatory approach, and seeing the success of it,
Right.
it was a lot easier for them to just take a regulatory stance on it, right?
Definitely. That
No,
makes sense.
yeah, and but what really happens, KP, here is that when it's a regulation, it's a law, right?
Hmm.
So banks, the reaction of the banks would be, different banks would have different reactions. Some would welcome it, but I can tell you, I've spoken, in the last 30 years, I've spoken to so many banks, and at least during the time when PSD2 was being rolled out, and today when people are migrating from Swift, MT-Fin to ISO 20022,
Hmm.
uh, you know, uh, uh, and this is not a conversation around that change, but
Yep.
essentially, the banks. I'm just talking about the sentiment behind it. Banks tend to then become a little, a sense of anxiety has been starts to creep in with certain
Hmm.
banks, because when you're saying open banking, you're also saying that all the I'm a bank, I have all the data, I have a huge customer pool, I know exactly their spending patterns, their earning patterns, I know the risk that I can allocate to every single bank account holder, and then I can offer them certain products and so on. But now, if I have to, because of innovation, and because if there is a regulation, which is law, and by law I have to share this data to third party players, meaning to an external ecosystem,
Hmm.
how will that affect my business?
Yep.
Maybe I might start losing, there is a threat to data being shared outside, right? So,
Yep.
so banks react in two ways. We've seen that happen in Europe, where many banks were resistant to this idea, but it got they had to comply with it, one way or
Right.
the other. That compliance had to happen, right?
Hmm.
So because it was a regulation, right? But then one has to also be mindful of the fact that, and this is wearing a regulator hat now, that when you take a regulatory driven approach, you also have to know for sure. You also have to be mindful that uh, when you're changing, when you're putting a such a framework in place, it costs money. So for all banks to then be compliant, they have to spend either large sums of money or I wouldn't quantify the amounts, but I would just say that there is a certain mandatory spend, and sometimes the spend is large, and that's why there's always a phased approach that they would, just like in Hong Kong, which has taken a regulatory driven approach of phase one would be loans and so on, and then phase two will be trade finance and certain other aspects and so on and so forth, right? So there's a whole timeline so that it allows for banks to budget, it allows for banks to take not to suddenly spend a large amount of money in the journey towards compliance, right? Regulatory compliance for open banking. So some in some geographies, it has been I mean, they have the regulators have taken or the governments have taken a very regulatory driven approach uh, because that works for them. They also have planned it in a way which does not become a deterrent for a bank, but there's always that anxiety of sharing data. And I wouldn't
Exactly.
say that any other approach will resolve that problem. That anxiety will persist unless banks start to see value, which now they have started to see a lot of value, right? So new products are out in the market. We just spoke of BNPL, buy now, pay later. And that by itself, banks wouldn't want to do it by themselves. And the third party players who come into the ecosystem help them do that. And that's a value that they see. And therefore, they can, sleep well, knowing that it was the right action and they to take to build that
Yeah,
API stack and so on, right?
definitely.
I think also geography plays an important role. In certain geographies, it's easier to mandate, a certain way of doing things or taking a regulatory approach, and then compliance towards that. I think, but when you start looking at, emerging markets, I would say, right? The cost of rolling out a regulatory driven a mandate would not make sense really, because the cost would be so high, and these are emerging markets with where not everybody has access to all kinds of services, right? So yes, today digital currency, and when I say digital currency, I mean a cashless marketplace. So there are countries in Africa,
Yep.
places in Indonesia where the population is very large, and then we also have in some of these some of our Asia Pacific markets, we have a huge flow of migrant workers coming in from under, how should I put it, uh, you know cheaper economies or emerging economies to affluent economies and there's a labor arbitrage out there, so people move, and when people move, they don't have they don't what really happens is that their identity in a new country, to for a bank to identify them and then to offer them financial service products does become a challenge. We see that predominantly in the migrant worker community, but and we are out here to solve those problems as well, and we
Right.
can talk about that. But many markets have taken a very market driven approach, therefore, because what they feel is that let's we everybody has to be, there are a lot of merits in adopting, being part of the API economy,
Yep.
and to be part of that, I think to compel banks to take a certain route maybe
Yeah, sorry, Samir, you were saying.
Yeah. So I was, yeah. So uh, if and I was saying that if this was mandated, while there is merit, it probably would be a challenge for banks to adopt it because in emerging markets the problems that you solve or open banking really solves
Mhm.
is very different. And I think one of the pivotal problems that open banking, open API, or the API economy is trying to solve in emerging markets is financial inclusion. And by that, what it means is that in these economies, we see either we see a large pool of customers who are totally unbanked, meaning they
Mhm.
have no access to financial services, and or they have access, they have bank accounts,
Right.
but very limited, access to financial services. And what that really means is that they don't have access to loans, they don't have, in many cases, access to insurance, hospital insurance, general insurance. When I say that, house insurance, or microfinance. They might not have the full suite of. They can't walk up to a bank and like how we have come to understand that in an urban area we can just walk into a bank and get a credit card or a debit card or open an account so quickly, right? So in
Exactly.
these underserved markets it becomes a bit of a challenge. So I guess that is and in those markets the approach that's predominant has been very market led. And what I mean with that is what is really market led, right? So what can the government or the regulator or the large banks in that marketplace or in that geography, and or technology players can really do? I guess what's done. Let's talk about what's done. So in Singapore, we where MAS is four regulators rolled up into one.
Yep.
So they are a single regulator that manages all forms of financial. All financial companies, so to speak, be it banks, insurance, funds, whatever they might be. So what they believed is that let's put some platforms in place. So there are societal platforms. There are, registry, national registry systems. There are, certain infrastructure that the government has invested in with the encouragement of the regulator. And the regulator themselves have put in some infrastructure in place, like we have real-time payments, which is fast, which is a payment rail in Singapore. So your interbank payment within Singapore is real
Mhm.
time. So you can, it's like actually, you don't have to wait 24 hours to see the money come in. It happens instantly, right? So I think I will cite a very classic example, which has been spoken of
Right.
in the last 2 3 years, which has been the UPI, or the Unified Payment Interface, or the initiative in
Mhm.
India, right? So India is a huge, it's one of the, it's a country with over 1 billion people in terms of population, the
Mhm.
second largest populated place on the planet, right after
Yep.
China. So to and one of the highlights in the last decade has been that a large majority of people in that country are now have access to financial services, so they can send and receive payments without even having a bank account. So something that is also happening in Africa. Mobile wallets have taken taken a very strong acceptance in the marketplace, or likings, if you will, where one can, I mean, that's a form of financial service provision where I necessarily do not have to go and open a bank account, but I still can store money somewhere, and that's your wallet, right? So,
Right.
coming back to UPI in India, I guess they have put together two things. They have put in a database, a national, a resident database. They call it the Aadhaar, which allows for, and they've taken it one step beyond, where it identifies, your fingerprint scanning and all that. So, which not in every country that has a social security system or a population database, so to speak,
Yep.
does not always allow for all aspects or all parameters to be covered.
Hmm.
But having that is a good thing because, for me to validate when I onboard a certain customer, either to give him a loan or him or her a loan or open a account. I want to know that the customer, I want to know all the credentials of the customer, and rather than having them fill out each and every line item, which I'm mandated to collect from them as part of KYC, right? Know your customer. I can actually pull that information using an API call to that database, and I would get everything. I
Right.
would get their date of birth, I would get where they live, their phone numbers, their how much tax they have paid, and so on and so forth. That will allow me to make a more informed and a good decision in terms of whether I'm either giving them an account or whether I'm giving them as a financial institution a loan or whatever it might be. Right? I would know whether they are a student or whether they are a employed or or whether they are alive or not, because these databases are always updated. uh, and then conventionally there is always, in every country there's been a credit bureau. There have been multiple credit bureaus that assess credit risk, of how many loans an individual takes. So all that information can be made available to anybody who has the right to that information, using having a set of APIs and making those API calls. So to answer your question, these were two approaches that we have seen predominantly in the market: a very market driven approach or a regulatory approach. And in the market driven approach, the difference only is that the problems not necessarily would be the same. So in many countries like Indonesia or Africa or in India, it would have been predominantly to bring about financial inclusion. So which means everybody should be bankable, everybody should have access to more financial services, at least basic services like payments and so on,
Yep.
and storing of value, which is having a place where they can keep money. So what's the difference? By Singapore, Singapore doesn't need to be part of that ecosystem, right? But because I think the only unbanked, or I wouldn't call them unbanked, but people who are underbanked in Singapore are migrant workers who come and work in Singapore. They could be called underbanked, the underbanked segment, right?
Yep.
What warrants the Singapore regulator not to take a regulatory approach? It's very simple. They are confident that when they put these platforms, societal platforms, real-time payment rails within the country, an identity aggregator engine, which could be a national register by itself,
Right.
and then you have and now you have private players also coming in, right? Who support KYC initiatives and all work on on the API model. Having that infrastructure does the thought process is that with that infrastructure in place, it would only encourage for people to uh, uh, then become part of the API economy, and then get creative in terms of coming up with innovation and providing better products and services to the market. And and then there's a lot that's happening. I think one one conversation will be too little for us to really
Definitely.
share what's happening. I mean, there's so many things. There's buy now, pay later. There's loans on wallets today. There are banks that the cost of acquisition of customers has predominantly been one of the challenges where banks are not able to serve an entire population. The biggest bank in a country is not necessarily an account hold or holds accounts of the entire population of that country, because some of them get left behind because there are two large aspects. One is the cost of onboarding that customer and then maintaining that customer for a year. And banks can't afford it. So, because the cost is too high. So they want to go digital. But to go digital and to reduce cost, can you repurpose some of the infrastructure that you have? And when you and I have spoken to customers, we've said that it's the best way. I mean, again, it's a greenfield initiative, but you don't have to build an entire bank, because all you have to do is have a front end or a digital bank, so to speak. And at the back end, you have, of course, some processors, because you will need some processors. But
Definitely.
more than that, you can link your existing infrastructure, which could be your core bank in itself, and your loan management system, your credit card, and your trade finance engine, and so on, through APIs into the digital bank. And the cost is so low that two things happen. You can launch your digital bank very quickly, just like how we have done. I think what comes to my mind is Jazeel. How we launched Jazeel in days, not months.
Indeed.
I think I can't even say weeks. It justifies to just say that we made a traditional bank become a digital bank in days. So Jazeel was a very good example, is a very good example. We've launched UAE's first digital bank, Zand, which from the time that they decided, or they were given permission to launch the bank. I think we are already, Zand is built and is ready to work as a bank. They still haven't gone. I know that they're going live very soon, but probably the only reason why they haven't gone live is because we reached the finishing line faster than they thought that we would. So I think that's the power of technology, and that's the
Exactly.
power of the thought process, and that's the power of APIs. And yeah, I mean, of course, one of the things that I see happening is that as I did speak about new business models, we are a good example of it. We have naturally taken the route of becoming a API aggregator. A financial institution or a business does not need to look at multiple different tech players to understand how they could integrate. All they need to do is to reach out to us, and as I said, we have 477 APIs in itself would help you build a complete bank and perform most of the bank's day-to-day operations. But our purpose of reaching 900 is also having some foresight to enable banking apps to become super apps. So within your mobile banking application, you could think of it as what Grab did. Grab became was a ride hailing company. It now is in the food business, it's in the transportation business, it's in the delivery business, and now they are also into financial services, right?
Yep.
And they're going to become a bank very soon, right? The same reverse principle can be applied to a bank where of course, we've signed NDA, so I can't really speak about some conversations that you and I are having with some of the largest, some of the really top banks here
Mhm.
in Asia Pacific. But if you were to look at it from a reverse perspective, these banks can actually take the route that they are a financial institution, the most trusted one at that, and now they can offer value-added services like ride hailing, food, especially at certain discounts on their own credit cards or debit cards, depending upon geolocations with integration to Google, and all is API driven, right? So for them to become a super app is also a reality.
Yeah.
So that's a positioning. So there's a lot that's happening, and primarily because, like I said, infrastructure or APIs and infrastructure has been, something that's it's a work in progress, but we've come a long way, and there are these platforms that we are today making use of. And I think in another conversation, we can speak a little more about this, and really a lot that's happening, not only from an API perspective, but predominantly API perspective, but also, how these digital banks, reducing the cost of onboarding and maintaining customers, and thereby making financial services available, and also looking at the concept of how banks can, since they're the most, they have won, customer trust, because you're keeping your money with them. How can they convert that trust into different revenue streams for the bank?
Mhm.
And you had asked me this question in one of our conversations that we have at Starbucks, I recall. But I thought that I should. It just came to my mind, and I thought I should bring that up now because that would make for a good, a conversation in our studios. While we are recording this and we are sharing our thoughts. Yeah, that would be another conversation that we should visit at some time.
Definitely. I think that's a brilliant idea. And, Samir, I think you've completely, hit every point that I was thinking about. And thank you so much for dropping all of this wisdom. To be honest, there's so much more to discuss about open banking and open API. I think this is just really the tip of the iceberg. And I think quite importantly, and I think you would agree with me on this, is at the end of the day, what we want the listeners or our audience to have is basically to have a strategic understanding of what
Yes.
open banking initiatives look like, especially around open API and open data, because I think it's still a little bit vague from time to time. So thank you again, Samir. It's been an absolute pleasure listening to you speak. And
Thank you, KP. Thank you for thank you for driving this. And yeah, we're gonna have multiple conversations. But you're right. The idea is to help everybody out there to understand how things can be constructed, and there are many things, in some of our, I think we came up with this idea of talking about it, recording it, and sharing this knowledge with a larger audience, not
Mhm.
just you, me, and a couple of our colleagues, is also because we get constantly asked by customers that can this be possible, can that be possible, and I think helping people see that if there's a lot that can be done, and I think that kind of knowledge awareness that we are, in a way, as you said, we are demystifying, the whole
Yes,
API, digital banking, and all these fancy terms, which for
exactly.
us is a normal thing. But, I can understand that many people outside, our business, for them, it's fancy language. So,
Yeah.
so yeah, it's a pleasure to be here, and I'm really excited to continue sharing a lot more in our episodes to come and have these conversations with you. KP, and yeah, look forward to having more of them. Thanks for having me today, and yeah, I'll speak to you again, in our next round.
You are very welcome, Samir. We'll definitely revisit this topic again. And with that, we've wrapped up the first ever episode of Disruption Demystified. Thank you so much for tuning in.
I think,
And-
KP, I just wanted to mention
Sure.
that aren't we going live today? It's the International Podcast Day.
Oh,
I've
yeah.
been given to understand. Yeah.
Definitely.
So,
Yeah, you're right.
yes. So, all the podcasters out there, I wish you a very happy International Podcasting Day. Yeah, we kick off today on a very special day, I guess.
Exactly.
And we were egged on, by our team, our marketing team, Tom and Nikita. They pushed us to do this today. So it's a pleasure to be, part of this whole podcasting phenomenon, and more so from a perspective, as you said, KP, to share a lot of our knowledge to the market to help people understand better. So yeah, I just thought I'll mention that. It was it was something that it just struck me right now while we were closing out. So
Yeah, a huge shout out to every podcaster out there as well.
Yes,
and to
absolutely.
the CBD team who made this possible. Thank you so much once
Yes.
again.
Thanks so
All right.
much.
It's a wrap then, I guess, Samir. So
It is a wrap. Yep.
Definitely.
Yep.
Till
Speak
then,
soon. Yeah. Cheers.
take care
then.
and stay
Yeah.
safe. All right. Take care,
All right.
everybody.
Take care, everyone. Bye.